Welcome to today's market report. European stock markets are seen opening higher on Tuesday, with expectation growing ahead of Thursday's policy meeting of European Central Bank. However, investors will be keeping a wary eye on the US tech sector as Wall Street returns from holiday. The DAX future traded 0.2% higher, CAC 40 climbed 0.3%, FTSE 100 rose 0.4%. The Eurozone is still on track to see a very strong third quarter growth figure. However, recent indicators signal some deceleration. Inflation is undershooting expectations, paving the way for an extension to the pandemic emergency purchase program. The European Central Bank meets on Thursday, and expectation is growing that it may be focused into action following the Fed's change in inflation tolerance at its last meeting at the end of August. The ECB is under pressure to prevent further strengthening of the euro, with core inflation already at record lows. We expect Lagarde to bring promises of more policy easing to next week's ECB meeting, if not concentrate easing measures, says Nordea Bank. The Eurozone economy is expected to rebound in the third quarter from a record-breaking drop in the 3 months through June. France's official statistics agency confirmed earlier today its forecast of a 9% drop in gross domestic product in 2020 due to the coronavirus pandemic. Overall, though, second quarter GDP numbers have been close to the ECB's baseline forecast, board member said last week. Earlier today, Japan's economy shrank an annualized 28.1% in the second quarter, more than a preliminary reading of 27.8%. Investors will also be keeping a wary eye on the return of the US market after the Labor Day holiday. The dominant tech sector, which has been seeing mammoth gains throughout the COVID-19 pandemic, hit the skids late last week due to doubts over positioning and stretched valuations. Oil price dropped on Tuesday, with the US WTI contract suffering the bulk of the selling after the US Labor Day long weekend, which makes the end of the peak US driving season. US crude future traded 1.7% lower at $39.09 a barrel. Brent fell 0.1% to $42 a barrel. Gold future rose 0.3% to $1,940.3 per ounce. On the FX front, GBP USD is now focused on 131 level, which could gradually return to the 131 region in the next weeks, suggested by the UOB group. The pound has continued to underperform amidst more risk-averse trading conditions. It has resulted in euro against sterling rising back towards the 0.9 level and cable falling towards the 131 level. Market participants have been unnerved by the negative Brexit headlines. The latest IMM report revealed that the pound's recent upward momentum had encouraged leveraged funds to begin building modest long pound positions, which are now being tested by heightened Brexit uncertainty. In the past, the pound has become more undervalued as Brexit risks increased. It leaves plenty of scope for the pound to weaken further should market participants price in more of Brexit risk premium to reflect the increasing risk of a more disruptive no-deal outcome. Recent price action still suggests that market participants remain confident, though, that a compromise Brexit deal will be reached at the last minute. The underlying belief that neither the UK nor EU would want to deliver another negative economic shock on the top of unprecedented COVID-19 hit. Such optimism has helped to dampen downside risks for the pound so far from the lack of progress in Brexit talks. UK's Housing Minister Jarek yesterday said, if EU is not flexible, we will leave with Australia-style deal. However, he added, we want a Canada-style agreement, and that is possible. Eurodollar is showing some signs of recovery following 5 consecutive daily pullbacks and looks to regain upside momentum above 118. On the flip side, the interim support emerges at 117.50, whilst the dollar was up 0.4% yesterday. This is today's market news. Thanks for listening. We'll see you next time.